The banking industry nurtures the narrative that their main role is simply to provide services and manage financial risk, and that the greatest environmental impact they could have is sorting out their office recycling. This is a lie, and in this video, we'll discuss a new report that shows how many trusted banks are consciously and deliberately perpetuating the climate crisis for financial gain. So keep watching to find out if your bank is part of the problem and which banks you should switch to help stop the climate crisis. Banking is a critical industry in our modern economy that influences every single other sector, including those that directly and significantly contribute to climate change. Many banks have finally recognised this and have issued statements pledging their support to mitigate climate impacts. The Bank of England has openly remarked that climate change is a strategic priority and that financial policies and capitalistic market effects are a suitable response to tackle it. This response is woefully inadequate, as market effects have continued to be an accelerator of climate change. But how? If we want to understand how banks affect the climate crisis, we should do a quick 30-second review of how banking works on a basic level. If you're already familiar with this, skip ahead to the next chapter. In a nutshell, banks provide us with security for our money, and most will actually pay you a small amount known as interest if you want to use their service. When you deposit money into a bank account, be it a current account, savings account, or pension, the bank is free to use that money for investments and loans with a higher interest rate. The risk with loans is that some people and businesses will fail to pay it back, but the ones that succeed pay back the full amount plus the interest. The bank uses this to pay your interest, while the rest is taken as profit. This is obviously very simplified, so check out the description for more detailed information on the banking process. So how does banking affect climate change? In our global economy, banks are continuously trading with each other and moving customers' money between investments around the world. The savings in your cash ISA could be funding a loan to build a coffee shop on your local high street, a solar cell manufacturer in Germany, or an industrial refinery in India. The problem is that banks are generally not transparent with their investments, so it's impossible for the average customer to know how their money is being used. As a result, most people tend to pick the bank which offers the highest interest rate. But if you have any interest in not completely obliterating the climate, then it's worth knowing how your bank is using your money. But first, a quick shout out to our 4 newest Patreons, Hugh Jazz, Mr. Rhys Brandt, Trick Montalban and Stephen McCarthy, for supporting us on Patreon. More about that at the end of the video. In recent years, many non-government organisations and activists have been exposing the critical role banks play in the propagation of fossil fuel usage. Their work culminated in a landmark report which inspired this video. Banking on Climate Chaos is the most comprehensive report to date on the banking industry's global financing of fossil fuels. Authored by the Rainforest Action Network, BankTrack, Indigenous Environmental Network, Oil Change International, Reclaim Finance and Sierra Club, as well as being endorsed by over 300 organisations from 50 countries, this report is robust and irrefutable. The report analysed the investment portfolios of the world's largest banks across 8 different fossil fuel sectors, including fossil fuel expansion, coal power, and extraction of different fossil fuel sources. In summary, the report found that despite many international initiatives to reduce fossil fuel consumption, global financing of fossil fuels is in fact increasing. In the 5 years since the Paris Agreement was adopted, the world's 60 largest private sector banks pumped $3.8 trillion into the fossil fuel industry. We'll say that again, $3.8 trillion. To put that into perspective, that's the equivalent of every person in the world with a bank account paying $152 per year to the fossil fuel industry before buying a single drop of gasoline. And what do we get in return? A few cents worth of interest. And that 3.8 trillion is not just the cost of maintaining our current fossil fuel dependency while we develop and deploy more renewable energy sources, it's actually being used to expand fossil fuel exploration and extraction. In 2020, the COVID-19 pandemic caused a global reduction in fossil fuel demand due to the world's reduced energy consumption. However, during this period, the world's 60 largest banks actually increased their funding for fossil fuel expansion projects by 10%. Across all sectors, fossil fuel investment is around $800 billion annually, and has been increasing by over 5% every year, and only dropped during the pandemic by 9%. As a comparison, renewable energy investment has been painfully flat during this time, with smaller investments of around $600 billion per year. Despite flaunting their progressive green agendas, The climate strategies, plans and pledges of the 8 largest oil and gas companies that get investment from these banks are not even close to alignment with the Paris Agreement, since they contain vast loopholes or are simply non-existent. For example, BNP Paribas, who never miss an opportunity to boast about their green credentials, invested $40.8 billion in fossil fuel companies in 2020, a 41% increase over their 2019 funding. This all points to one thing, that despite rapid growth in the renewables sector, the fossil fuel industry is not in a managed decline, but a paid expansion, which it obscures with aggressive greenwashing campaigns. Even with the pledges made in the Paris Agreement, currently we are likely on track for at least 3 degrees of warming compared to pre-industrial levels by 2100. Hence, what we desperately need is a shift in investment priorities to more environmentally sustainable projects, and for banks to be held accountable for accelerating our planet to these extreme levels of warming. That being said, let's have a look at the worst banks out there. Here are the 60 banks analysed in Banking on Climate Chaos. These are the largest commercial investment banks in the world. The report highlighted the following findings. Citibank is one of the worst for funding fossil fuel expansion projects. Wells Fargo is a top fracking funder. Bank of America is the biggest funder for liquefied natural gas fracking. And BNP Paribas has the best on-paper progressive policies and green ad campaign, but still heavily funds oil giants, making it the most egregious greenwasher. Regionally, Asia's worst bank is Japan's MUFG for its funding of fracking and tar sands. Bank of China is unsurprisingly the worst in China, as they are the world's #1 funder of coal power and have almost zero green policies. RBC is the worst in Canada and top funder of tar sands oil in 2020. ANZ has been and continues to be the worst funder in Australia 5 years in a row. In Europe, Barclays is the worst overall fossil fuel funder since the Paris Agreement. And now, the award for the world's greatest funder of fossil fuels 5 years in a row. Drum roll, please. JP Morgan & Chase, with a total of $317 billion invested from 2016 to 2020. These banks are incredibly powerful, and it's easy to feel like they're too big to fight. While some activists do try, it's useful to remember that they are only as powerful as the number of people who bank with them. So a simple and effective action everyone can take to stop fossil fuel funding is just to switch banks. Since the publishing of this report, 43 banks have signed up to the Net Zero Banking Alliance, which pledges to align investment portfolios to net zero emissions by 2050. But it's uncertain which banks, if any, will keep this promise. So which bank should you switch to for both storing and borrowing money, and are any of them trustworthy and transparent? This video is not sponsored, so the following recommendations are based on our unbiased research. Starting with UK banks, Nationwide and the Cooperative Bank are good options, but the clear winner has to be Triodos. They're a small online bank, so we wouldn't be surprised if you've never heard of them. Triodos refuses to fund fossil fuels, mining, Arctic drilling, fracking, or military technology, but instead invests in the environmental, social, and cultural sectors. Additionally, they're incredibly transparent and publish details of their lending patterns so you can see exactly where your money is going. For our American viewers, the best bank depends on which state you live in. The US Green Bank Consortium comprises 21 member banks and 7 supporting institutions which help to make more sustainable housing, energy, and transport across all states. To help you decide who to go with, we recommend using Mighty Deposits, an independent, women-owned bank comparison website that compares US banks based on criteria such as sustainability, community investment, and levels of fossil fuel funding. In Europe, there's banks such as Emerald Technology Ventures of Switzerland, PME Investimentos of Portugal, and in Norway, this one. Sadly, we don't have time to list sustainable banks from every nation, but here are some others from around the world. If you're not from one of the nations we've listed here, we hope this video has inspired you to investigate your banking options. And if you know of any other progressive banks in your country, please share it with us in the comments below. Many of you will also have heard how extremely damaging Bitcoin mining is and might be wondering why we haven't considered cryptocurrencies in this analysis. But what if we told you that not all cryptocurrencies are bad for the environment and that blockchain technology can actually be used to help stop climate change? This is a very new and exciting area of carbon financing which we hope to share with you in a future video. So consider subscribing and click the bell icon if you'd like to stay up to date with our videos. We've also launched a Patreon account, so if you want to support this type of content, please consider joining. Here you get early and ad-free access to our videos, bloopers and outtakes, and even contribute to polls on topics which we discuss and which charities see a share of our income. And as always, look after yourselves, each other, and most importantly, the planet around you. Thanks again, OurEden.